Good morning to all traders and welcome to this Thursday's market insights video provided to you by Orbex. Stavros is here, head of investment research. We are going to talk about metals and energies. That will be the oil and gold, particularly for the day. We've seen the oil markets taking another hit as Saudi Arabia now doubles down on production as the prices actually continue crashing. The war is escalating between Saudi Arabia and Russia. Pretty much that's what I'm saying. Then we've had the EIA yesterday as well affecting the oil prices, but I doubt any of that effect is actually going to be, it's really what caused this huge decline. However, we've seen now 2 million barrels of stock just sitting there, and that is likely to pile up in the near future because the coronavirus is not going anywhere soon. We've had circuit breakers coming into play once again. The RBA cutting rates to 0.25%, pound tumbling like 6% on the day. This is massive news. And you know, I'm actually personally very keen to see and show you where I'm thinking about where I think oil and gold are gonna go. I want to start with oil, but then gold as well. We're gonna see whether we're gonna actually experience more declines, and in my opinion, we are going to. And it's not because you know, safe havens are gonna be weak. It's because gold has been the only hedge for institutions. So it means that they really need to cash out money to rebalance their portfolios now from losses that they have experienced from other assets actually, which means that we are likely to see gold moving a little bit lower, but that will be in the medium term potentially. Then once the effects of the monetary policy easing start kicking in, we're going to see another high. Now back on the oil, and let's go on to technicals, where I talked about this ABC pattern potentially ending to around 12 or so. I mean, yeah, this is the level that I can see by just putting this Fibonacci extension over here between waves A and B in the cycle degree. Now, the 1268 is the 78.6 Fibonacci extension, right? Now, if we take it a closer look on the medium term, we see wave 1, 2 here. So we're expecting 3, 4, and 5. I believe wave 3 in the primary degree is done. I don't really think we're going to see wave 3 extending to the 161 extension. It's too low for a price for the oil. If that happened, then we're most likely looking for wave 5 to go anywhere below 9.79. We could literally like go to 8 to 7 on any other price. So with that being said, I'm seeing wave 3 done. I'm expecting wave 4 in the primary degree to be sharp because wave 2 is not. And then another move to the downside, potentially an ending triangle or another fifth 5-wave impulse to take out wave C. And from there, I'm looking for prices to start moving higher, right? Now on gold, gold is also moving down, okay? And we explained why in the beginning of this video. Now, I see this as an ABC. I have been actually over the long term now. I've been talking about this for a while now. We're expecting prices to shoot up here. Now, 1, 2, 3 looks that is done. 4 more sharp, and then another move to the upside for wave 5, right? This is what at least I see for now. Now, we haven't really extended to the 200 Fibonacci extension of waves A and B, 1 and 2 in the primary degree. We only took out third, which is a bit more extended probably to the 178 or something extension here. So I'm really expecting in the medium term to see that being taken out, the 1782, right? However, until then, we still have a lot of time, right? Now, what we're probably looking at, since we fall down to that level, which is the 100 Fibonacci, right, of the previous, now probably looking for prices to start moving in a consolidation, okay? And why I say this is because we don't have much space left on the downside. So the space I see on the downside is down to the 1373. So I'm expecting prices to go lower to that level. This is potentially going to be an A, B, C, if you may. Okay, so we could get a B triangle over here or anything else, then C wave to take out this top as well as the trend line low. And from there, another impulsive move to the upside to take wave C. Now, of course, this could fail because we've seen institutions still cashing out. In case we go below that level, then we're looking at a potentially a whole new pattern over here, which means that this could even be wave B, okay? So probably looking at something like A down here, B up there, then C, and that would be the cycle wave B, yeah? And from there, we're looking price to start moving higher, right? So in case we break the 1374 or so, then we're most likely looking at this being a B wave, a more complex wave, obviously. That would suggest that this is A, B, and C, okay? Because we cannot have an impulsive move in a B wave, which means that that's 1, 2, 3, 4, and 5 as correctly identified. However, that would be the fifth, okay? So it means that we ended up here and we're looking to go down for wave C, which is going to be B in the cycle degree, and then move high. If you have any comments or any questions, please don't forget to post them on our channel, and I will get back to you as soon as I can.